Exxon AI. What if the AI race isn't about chips at all? What if it's about the electricity to power the data centers? China is going to win the artificial intelligence race, says Jensen Huang, who's the CEO of NVIDIA. But does he have a point? Not long ago, about a fifth of NVIDIA's data center revenue came from China. Its fortunes depended on steady stream of orders for its chips from governments, cloud providers, and AI research labs all over the world. The fear of China pulling ahead in AI reinforces that demand. A GPT-4 model can use up to 463,000 megawatt hours of electricity per year. That is more than the annual energy consumption of more than 35,000 U.S. homes. As a result, the price and availability of power will increasingly determine the pace of AI progress. Here, China has a head start. Last year, it added a record amount of renewable energy capacity, mostly from new solar and wind installations. So basically, China is building out renewable energy way faster than the United States is. Meanwhile, in the U.S., wholesale electricity costs have been rising, with prices today as much as 267% higher than 5 years ago in areas near data centers. But investment in many types of renewable projects, including large-scale wind and solar, fell in the U.S. during the first half of the year, reflecting policy shifts and regulatory uncertainty. The White House has also detailed an executive order ending subsidies for wind and solar power. Well, that doesn't seem good. Not great. Electricity generation. Okay, so basically, what the Financial Times is claiming here is essentially that the real race in AI is not necessarily chips, but power. And so the problem is we're losing the electricity war. This is very bad. This is a graph of China versus the United States in terms of electricity power generation. The United States has basically stagnated over the last 40 years. And they passed us in 2010 in terms of how much electricity that they generate. And so the big problem is if the amount of electricity generation stays the same, then prices rise because the same amount of electricity is being pulled in too many different directions. And so as sort of data centers come online, we're going to sort of run into this problem where we just aren't doing electricity in the United States. And there are so many ways we could be doing it, but we're just not. Our policy is not catching up with the material reality of demand for electricity. Not only for, we saw a couple years ago, 2021, 2022, all of the big car makers saying essentially they're going to be doing EV only in 2030, 2035. And by 2050, there's going to be, no more gas cars ever again. There's this sort of really big problem that the United States is running into where we're just not generating the electricity. Instead of weird sort of policy where we're like, okay, we're going to shut down sort of solar and wind farms, we should be like, okay, we should be building these out as much as possible. Now, granted, this is to say, China is building out a lot of coal as well. There's certainly something to be said about China using non-renewable energy, but for the most part, China is using renewable energy. And the fact that the United States is basically bottlenecking itself, and especially over the over the last 10 years, we've gone from 4.08 terawatt hours to 4.25, right? That's basically nothing. And we're seeing demand surge. And that's why we have all these stories all over the place of electricity prices going up. In the United States, wholesale electricity costs have been rising, with prices today up as much as 267% higher than 5 years ago in areas near data centers. It's because the data centers can pay the higher prices. And so because the United States is not building out its electricity infrastructure, the same amount of electricity is going to the same place. And so now that there's these new data centers, they have unlimited money. They're just going to pay the higher prices. And so that screws over everybody else that lives in those areas because the data centers are paying more for electricity. And so the companies that are doing electricity, they're going to raise the prices for everybody. I looked into this just a little bit more as well. Goldman Sachs did a report on powering the AI era. And now it would seem that artificial intelligence is going to require $5 trillion in funding for digital infrastructure and power. We need power for data centers. Hyperscalers are at the forefront of AI and projected to invest $1 trillion in CapEx by 2027. The assumption that AI improvements require ever more data centers and compute resources drives capital expenditures. One other big thing that sort of leads into the next bit is everybody's building new data centers. Hyperscalers typically own the process themselves, securing the power and land, or outsource the heavy lifting to third-party developers who provide plug-and-play solutions. One of those plug-and-play solutions is Hyperion, and this is sort of the pinnacle of maybe this is the top. This seems kind of like a top. Earlier this month, a company you've never heard of issued the largest U.S. corporate bond in history, raising $27.3 billion. The company, BeigeNet, I don't know how to pronounce this, Benyet, I think I'm going to say Benyet. Benyet Investor LLC is actually a recently formed joint venture between Mark Zuckerberg's Meta and Blue Owl. So Meta wants to build a gigantic data center in Louisiana, and they're calling it Hyperion. Blue Owl is providing the bulk of the financing. Meta is already building the first gigawatt data center called Prometheus in Ohio, which is due to come online in 2026. Hyperion will initially consume over 2 gigawatts and supposedly up to 5 gigawatts. The bond is guaranteed by a lease taken out by Meta until 2049 at the facility. The largest corporate bond in history is being used to build out an AI data center, and that corporate bond is being secured by a lease obligation from Meta. And so now we're talking about Exxon Mobil. Exxon Mobil has sort of silently, over the last couple of years, been building out its non-gas assets. And so now they are looking to power AI data centers. This is also not the first time that Exxon Mobil has talked about this. So obviously the most recent thing is in the Q3 earnings call, Darren Woods, the CEO of Exxon Mobil, basically said, hey, we want to work with AI data centers in the future. In April, the company partnered with Intel to develop new liquid cooling technologies for data centers, and Exxon Mobil announced its move into data center cooling fluids in October with a portfolio of synthetic and non-synthetic fluids for keeping hardware temperatures down. It plans to further develop its range with the help of Intel. And ExxonMobil is, of course, not the only company that is doing this, but Chevron is also getting in on this game. Chevron chose West Texas as the site of its first project to provide natural gas-fired power to a data center, the beginning of a new line of business for the oil giant to capitalize on the boom in artificial intelligence. So you have all of these gigantic oil and gas companies who are like, oh, hey, data centers need power, and so we're going to use natural gas as our sort of method of choice for powering these. Now, I don't necessarily think that that's the best idea. I would prefer something a little more nuclear. But Chevron is one of the biggest producers in the Permian Basin of West Texas, which spews out so much natural gas that it often overwhelms pipelines and has to be burned off. Well, that's a good problem to have, I guess. We've got the gas, says. So you heard it here first, folks. Chevron has the gas. And that being said, so we see here the Permian Basin of West Texas. ExxonMobil also just made an acquisition of Pioneer Natural Resources. It transforms ExxonMobil's upstream portfolio by more than doubling the company's Permian footprint. So they were already in the Permian Basin of West Texas, and now they have doubled their footprint in that region. What we see is there is a giant problem in the AI space, not necessarily with chips, but with power. And there's a big race, at least in the United States, because China's sort of already in the lead here, to provide power to major AI data plants. I do think it is a massive problem for the United States that they absolutely need to figure out how and why we are losing to China so hard on electricity power generation. We have 25% of the capacity. We had a 40-year head start, and now we have 25% of the capacity of China. How did this happen? Why did this happen? This is completely unacceptable. We're moving into this new world of electricity, and we're lagging so far behind.